This is The Gist, the essential podcast for the discerning listener.
Welcome to The Gist. It is Wednesday, July 15th, 2026. I'm John.
And I'm Mary. We are your smart friends on the go. We skip the jargon and break down today's news to show you exactly who benefits and why.
Let's start with the Gist View. Today it is all about the checkout lane. Stripe, the massive private payments processor, is teaming up with a private equity firm called Advent International. They are offering $53 billion to buy PayPal.
They are bidding $60.50 a share. This is a huge shift in the power dynamics of commerce. PayPal is the famous consumer brand you know, but Stripe operates the invisible plumbing for millions of businesses. This bid proves that in global digital commerce, business-to-business utility now easily beats consumer brand awareness.
Exactly. So who benefits here? Stripe. By using private equity cash for a buyout, Stripe gets to swallow a massive rival. More importantly, it avoids the painful public scrutiny of an initial public offering.
And the combined numbers are simply staggering. If this goes through, the new mega company will process $3.7 trillion a year. That is roughly 3% of the entire global GDP.
Imagine one toll booth collecting fees on 3% of world economic activity. Naturally, regulators in Washington and Brussels will fight this. The antitrust resistance will be severe.
It is a stunning reversal of fortune. Just a few months ago, Stripe was valued privately at $159 billion. PayPal, the legacy giant, hovered at just $42 billion. The invisible backend just bought the famous storefront.
Let's move to the global overview. The reality distortion field around space travel is finally meeting cold, hard cash.
Right. SpaceX, Elon Musk's rocket company, is seeing the yields on its 2056 bonds jump to nearly 6%. A bond yield is basically the interest rate a company has to pay investors to borrow money. When the yield goes up, it means investors are nervous.
Credit markets are demanding a much higher risk premium. SpaceX debt is trading dangerously close to junk-rated levels. This means it is no longer seen as a safe investment-grade bet. Wall Street is forcing strict financial reality onto space industry capital.
Meanwhile, back on Earth, the artificial intelligence gold rush continues to print money for the hardware sector. ASML just raised its financial forecasts.
ASML is Europe's largest tech company. They make the highly complex machines that manufacture advanced microchips. They provide the picks and shovels for the artificial intelligence boom. Tech giants are pouring billions into artificial intelligence, and that money flows straight to ASML for foundational hardware.
Turning to the European perspective, let's talk about the Turnberry deal. That is a 2025 agreement between the European Union and the United States that capped certain tariffs or import taxes at 15%.
Brussels now wants 150 billion euros worth of exemptions from that deal. They want to protect high-margin European products. We are talking about Roquefort cheese, olive oil, and industrial robots.
This is a textbook case of rent-seeking. Domestic lobbies pressure politicians to rewrite the rules for special protection. The European Union claims they are just retaliating because the United States previously expanded tariffs on steel products.
Who benefits? European farmers and robot manufacturers. They use the agreement to lock American competitors out, securing their own domestic profits.
Let's look at Italian politics. Prime Minister Giorgia Meloni just lost a crucial vote on electoral reform by a single ballot in the Chamber of Deputies, 188 to 187.
The defeat happened in a secret ballot. About 30 lawmakers from her own ruling coalition voted against her.
This is a structural feature of the Italian parliament. It is not a grand ideological rebellion. Anonymous lawmakers sink a bill today to demand favours and legislative concessions tomorrow. It is simply about extracting leverage. Speaking of leverage, let's look at Ukraine. Kyiv is buying components for military drones from Chinese suppliers, and they are paying for it with €6 billion in European Union funds. This exposes a massive policy contradiction. The European Union's stated long-term goal is to decouple its supply chains from Beijing. But Ukraine has an immediate, desperate need to win a war.
So European defence capital flows straight into the pockets of Chinese tech manufacturers. Short-term survival simply outranks long-term strategy.
Finally, let's check in on Repower European Union. That is the European Commission's massive funding plan. It was designed to cut dependence on Russian fossil fuels and speed up the green energy transition.
The latest data confirms a trend we talk about often. Yes, Russian energy dependence is down, but member states are completely missing the environmental targets tied to the cash.
The incentives are skewed. European Union recovery funds pump up a country's GDP in the short term, but they often obscure a total lack of structural reform.
The money flows, but the actual green transition stalls. That brings us to the end of today's digest. What is the temperature out there today, Mary?
The temperature today is highly pragmatic. Whether it is Stripe buying market dominance to skip an IPO, Italian lawmakers trading secret votes for leverage, or European Union funds buying Chinese drones, pure ideology is stepping aside. Today, raw utility and immediate survival are dictating exactly where the resources flow.
Perfectly said. Thanks for joining us on The Gist.
And hey, if you found today's episode useful, you should get The Gist for free every single day. Just tap the subscribe link in our show notes to join the daily newsletter. We'd love to have you.
See you tomorrow.
The Gist, News Digest, and podcast are entirely written and produced by artificial intelligence. The Gist is out 3 times a day, every day, providing you with a liberal perspective on what to expect next. For more information and donations, visit thegist.online. Thank you for listening.